It's time to look at the charts with gold continuing its downtrend. The question is gold headed towards the $1,000 price tag? Joining us now is the editor of thegoldforecast.com, Gary Wagner. Gary, good to have you back on the show.
Great to be here. Great to be here, even under these circumstances.
Well, you said it. We've seen some chart damage in gold futures lately. The million-dollar question seems to be, was the famed economist Nouriel Roubini right? Based on your experience, could gold hit $1,000 in 2015? That was his prediction.
Well, you know, he absolutely could be correct. And the key is right now is the level that we're at. Of course, yesterday and Thursday's trading, we hit an intraday low of 1073 and bounced back off of that point. That point is a critical point in that, one, it creates a double bottom. We've been there one time before, in fact, just before we had the rally up to 1191. And secondly, it is a 61% retracement of the larger rally from about 550 up to 1920.
So, Gary, to recap, what key levels are you looking at for gold, especially as we approach the Fed, the potential December rate hike that we might see in December? Or has this already been priced into the gold price?
Well, first of all, I think that the action that we've seen over the last couple of weeks with the dramatic decline is baking it or pricing a rate hike into the equation. I think that that's one of the primary reasons we've seen so much downward pressure. In terms of key levels, as much as I am a technician, technicians acknowledge that it's fundamentals that really rule the market, and whether or not there is a rate hike is what's been moving this. So my key level is 1072, 1073, the lows that we hit. Below that, the next key level is 1,000. Above it is 1,100.
Well, I know we usually focus on technicals with you, but let's look at the fundamental side a second. In the past, India's Diwali festival has been a main focus for gold watchers as demand tends to pick up. But it seems this year's celebrations came and went. Will physical demand out of India and China continue to support gold prices here, Gary, or should we be worried?
Well, I think that demand will continue to be brisk in the East, specifically China. You know, being out in Hawaii, I have the great luxury of being able to watch the markets not only in the United States, but actively in Hong Kong and London as it trades around the world. And one thing I've seen consistently is that the market gets bid down in the States and it gets bought back up when it goes to Hong Kong. So I think you want to take a look at what's going on in China. As far as a demand in India, that has been lackluster to say the least.
Gary, thanks so much for your thoughts. I wish you a happy weekend.
My pleasure, and I want to wish all of our Chart This viewers a great weekend, and most importantly, prosperous trading and investing next week. We'll talk to you real soon. Bye-bye.
Thanks, Gary, and thank you for watching this edition of Chart This with Gary Wagner. We'll see you next week.